$34.8 million, $374 million disappeared in 2022. Want to know the real reason why most investors are completely avoiding the Toronto real estate market? Investors are losing money. So in this video, I'm sharing with you a couple of reasons why investors are staying away from the Toronto real estate market. I'm also going to tell you exactly how much investors have lost ever since 2022 when the housing market burst. On top of that, I'll share with you a couple of thoughts on what investors are likely to do in the next year in 2025. Let's go. Toronto used to be a highly coveted city where people would choose to invest in almost any kind of real estate. You know what they were buying? Everything. It didn't matter if it was a low-rise detached home or a high-rise condo, just as long as the numbers matched their investment goals. Nowadays, that isn't the case anymore, and here's why. Over the last few years, property values have come down. To save you some time and catch you up on this is me trying to give you a snapshot in 30 seconds of the last few years. Home prices came down during 2020 during the global pandemic. This happened all over the world, hence why it was called a global pandemic. But just 1 year later in 2021, the impact of the pandemic on the housing market faded away and prices went back up. Just another year later, in March 2022, the average price in the GTA hit an all-time high of $1.3 million. So in 3 years, average home prices fell into market corrections after reaching all-time highs 2 times. And as we know, this is how we ended up where we are today. The combination of high interest rates and high home prices make a perfect combination in a good way, or a bad way, depends on how you look at it. Real estate investors and speculators have since backed out of investing in Toronto, as in they're not interested in Toronto real estate, and here are the 2 reasons why. First reason why Toronto investors have vanished. Investors are not making money. In fact, they're not just not making money, they're losing money in 2 ways. The first way that they're losing money is higher debt service ratios. That's the ratio between expenses and income. And I wanted to highlight in this video exactly how bad it is for investors by sharing how much money they've lost in 2022 and in 2023. Let's talk about the one thing that probably every investor wants, which is cash flow. In real estate, that's the amount of rental income from the tenant minus the expenses that they have to pay. Those could be things like monthly mortgage payments, property taxes, and maintenance fees. Investors buy property with the expectation that they'll make a positive return through rental income. This is also known as buyer speculation. Do some math and it's actually easy enough to figure out if in that moment in time a property is going to have a positive cash flow. And we'll even look at an example of this. The problem right now is that investors are cash flow negative, especially when it comes to the investment condo market. Ever wonder why there's so much condo inventory? Negative cash flow is probably one of the #1 reasons why. Over the last few years, many condo investors have not been able to sustain the monthly payments with lower rents and higher interest rates. There's a pretty good chance that a lot of them are over leveraged and with multiple mortgage debts. So what do? They do the right thing and sell off their negative assets.
Hey! Be a man, do the right thing!
Over 80% of new condo investors that had a mortgage on that property were cash flow negative in 2023. Ready to hear how much they lost? Their average losses were as high as $597 a month. And to illustrate how bad it is for investors today, here's an example of what those losses actually look like. Got my trusty whiteboard. Hopefully this is in frame. I'm comparing the current market with exactly 10 years ago, 2014, 2024. A 1-bedroom condo was about $300,000. Today's average price is roughly $550,000. Now let's look at interest rates. In 2014, the average variable rate was 2.7%. Today's borrowers are getting a variable rate of 6.65%. A little bit of quick math and we end up with these mortgage payments. Rents in 2014 was about $1,600. Today's rent for the exact same place is about $2,500. That's rent going up 5.5% every year. So cash flow was positive 10 years ago and today it's not. Any idea why? The amount of down payment you would have needed in 2014 was significantly less than what it is today. A 20% down payment on $300,000 is $60,000. The other 80% would have come from the bank. But here's the best part. Even after you pay back the bank when you sell the property, all of that growth in equity is yours. The bank gets 0% of that. And yes, of course, the government gets their taxes on that. Can't really avoid it, but what can you do? Either way, that's the reason why Toronto condo investments have historically been a target for real estate investors. When you compare the rental income to mortgage payments, you can already see that today's condo market doesn't make sense for investors. This doesn't even include things like property taxes and maintenance fees, which are other expenses on top of mortgage payments. So the gap gets bigger and so do monthly debts. In fact, CIBC revealed in a recent report that 77% 58% of all investors were cash flow negative in 2023, which means the rents did not cover ownership costs, including mortgage, condo fees, and property taxes. It gets worse for them. 58% of them had a mortgage and were all cash flow negative. Only 18% of them had a mortgage and were all still cash flow positive. 30% of these investors of brand new condos completed last year were cash flow negative by $1,000 per month or more. This one's pretty important. Pre-construction condo investors who took possession and rented them out last year were losing about $1,000 or more every single month. At one point, those numbers had to make some sort of sense for them to buy these condos in the first place, and this was probably back in 2018 or 2019. So to see that there's a delta of about $1,000 or more really goes to show how much the housing market has changed in the last few years. During the first half of this year, it gets even worse. 81% of investors who had a mortgage were in cash flow negative positions. So now you can really see why investors are not interested in Toronto right now, and also why the condo market is in the worst shape it's been since 1991. Any idea how much investors actually lost in 2022? Let's go back to the cash flow drawing for just a second, which will lead into some pretty big numbers that just might blow your mind. In 10 years, a one-bedroom condo would have earned you $250,000 in equity. That's roughly an 8.3% return every year when you average it out. Not bad for just buying your home and living in it and sitting on it for 10 years. But I know some people will debate this and say that they could have made more money in the stock market. Yeah, that might be true, but you don't live in the stock market. You live in a home, like that condo. Those gains in equity are known as capital appreciation. And that brings us to the second reason why Toronto investors have vanished. Rental cash flow was just one half of the recipe. Capital appreciation, or growth in property values, is the other key ingredient for real estate investors. And today, it's not there. In fact, condo values are down, which means a lot of investors have lost money. Investors depend on renters since they can't just leave the property empty. The vacant home tax launched almost 3 years ago in January 2022, right before the Bank of Canada's first rate increase that year. The vacant home tax was meant to force investors to sell empty homes or put them on the rental market. If the property sat empty, they would get a letter in the mail asking to pay an additional tax, but that tax wasn't the biggest hit on investors. Because home prices came down, investor speculation of the market went the opposite direction. Instead of thinking that home values were rising in the short term, it became obvious that home prices were not going up after interest rates went up. So investors were not interested and buyers were not buying. Demand was no longer there. In fact, investors in the pre-construction condo market typically make up to 70% of all buyers. That's a pretty wild number to hear, considering that these homes should be meant for first-time buyers. But developers understand that investors are typically the ones with the money. And today, pre-construction condo sales are at a 20-year low. If sales are down, developers are not building. The underlying problem that this creates is a shortage in the supply. And yet, we're currently not in a market where home prices are going up. And that's the first red flag for investors. But even if home prices stayed flat, that's mostly going to be okay since eventually home prices will go up if you can wait long enough. It isn't about timing the market, it's actually about time in the market. Okay, so now let's look at how much condo values have come down in the last 2 years and what that means for investors and how much they've lost. The drop in condo prices since 2022 is about 7% compared to today's market values. There was $11.4 billion in sales volume from all condos that were sold that year. This works out to $750 million of condo valuations that disappeared in 2022. Now let's add in 2023. $9.5 billion in total condo sales. 2% loss works out to be just over $200 million. The 2 years combined give us a total of about $1 billion.
Billions and billions and billions and billions and billions and billions.
That's how much in condo valuations that have disappeared based on today's average condo price of $721,000. Condo investors own about 39% of condos in Toronto, which means that in the last 2 years, Toronto condo investors have lost $374 million in condo values. If investors also represented 39% of the condo transactions last year, then their total loss was $34.8 million in rental income for that year. So to recap, investors have lost about $374 million in condo values in 2022 and in 2023, and a total of $34.8 million in rental income last year. So now what are investors going to do in 2025? Are they going to flood the market with falling interest rates and the oversupply of condo inventory? For condo investments to become attractive investment options again, their prices and rents would both need to go up faster. Interest rates need to come down a lot more too. We are expecting a few more rate drops by the end of next year, CIBC expects the Bank of Canada's overnight rate to drop to 2.75% by the end of next year, which means that borrowing costs will go down, which ultimately props the market back up with more buyer activity. I'm not expecting investors to step back into the market as soon as we see mortgage rates come down. If anything, they've spent the last 2 years in debt from high mortgage rates, falling home prices, and average rental prices, which has forced many of them to sell at a loss. 2025 is probably going to be an interesting year to say the least. Leave a comment to let me know what you think is going to happen. If you made it this far, subscribe to stay updated and for some more awesome content. Thanks for watching to the end. See you in the next video.